Intro to Accounting, Mr. Roberts here, and today we're going to look at Lesson 5.3, Dishonored Checks and Electronic Banking. The big concept here is just really dishonored checks. The rest of the stuff is mostly just key terms. So let's jump in. First thing that we have is recording a dishonored check on a check stub. And the first question we need to ask is, what the heck is a dishonored check? So if we look here, it says a check that a bank refuses to pay is called a dishonored check. Banks dishonor checks for many reasons. A check dishonored by the bank could be because of one of these reasons down below. So when we think of a dishonored check, what we want to think of is not necessarily like a check that we wrote being dishonored, right? I mean, that could happen. But normally what would occur is we get a check from a customer and they say, here you go, here's the check for your services. And it is not, when we go to the bank, it is not going to be able to be cashed. And that's a major problem because a lot of times that liability falls on us. We're actually going to be charged for that. As the depositor, the person that received that check, we're the one that gets charged. So there's a lot that we need to kind of take care of here. If it is dishonored because there's no funds in the customer's account, that's called an NSF check, or non-sufficient funds check. And you can see here that there's some other reasons why a check might be dishonored. If it appears to be altered, we just looked at how you write a check. Well, if it looks like somebody altered that check, what's going to happen is the bank's going to say, nope, we're not going to cash it. The signature of the person who signed the check doesn't match the one on the signature card at the bank. So if somebody's signing checks for somebody else when they're not supposed to, that raises a red flag at the bank. The amount written in figures does not agree with the numerical amount. It says $395, and in the little box, it's actually $350. Something's wrong there. That check could be dishonored. If the check is actually post-dated, so it's way in the future, and if the person who wrote the check has stopped payment on that check. And you can do that. Let's say we rendered some services and somebody they didn't really like the services, and we already got the check. They can actually stop payment on it and tell the bank, do not cash that check. I don't want them to have that money anymore. So, if we do this, issuing a check on an account with insufficient funds is actually illegal, right? That's writing out a bad check. You can get in trouble with that. And obviously, if you forge a check or mess something up like that, intentionally, that's also illegal as well. Most of the time, maybe not most of the time, but a lot of times, if somebody has a dishonored check, it might become an expense for that actual company. It really stinks because it doesn't always fall on the people that wrote the check. I mean, it kind of does, but a lot of times they kind of get away with it because then they stop returning phone calls and you got to try to collect the money that they still owe you. And a lot of times it's just a pain in the butt. But for Delgado Web Services, we're going to try to charge them. We're going to try to put that money back on their account. And on top of that, the bank is going to charge us a fee, and we're going to charge the person that wrote that bad check the fee as well. And a lot of times a bank is going to charge the depositor, $40 or something like that, because they didn't want to handle that. Does it really cost them $40? No, but it's like an inconvenience for the bank because they're having to deal with it. So it's pretty expensive, actually. So we are going to record a dishonored check on this check stub here. And how do we do that? Well, on this line that we kind of had there previously before we had service charges in 5.2, we just write dishonored check. And is that dishonored check going to reduce our balance or increase our balance? Well, it's going to reduce our balance because we thought that money would be there and now it's not. So that is going to reduce our balance. When we look at it and we have that $225 here for the dishonored check, what does that all include? Well, that's going to include, and you can see it here, it includes the check amount, which is $185, and the service fee. So we're taking that $185 and we're adding in the $40. So it's $185 plus $40, and that's where we get the $225. We write down the dishonored check for the original amount of the check plus the service fee. So there we go. that's how we record it on a check stub. But now, just because we record it on the check stub doesn't mean it's anywhere in our journal. So we need to record this in our journal. Our source document is going to be a memo because, right, like a memo is kind of that catch-all where we can write in certain things. We need to write in that this was a dishonored check. So here's our transaction, and it says August 29th, we received a notice from the bank of a dishonored check for Valley Landscaping, meaning we got that check from Valley Landscaping, we sent it to the bank, and the bank said, no good, there's no money in there. So we received that notice, the check was $185, and then the bank charges $40. Well, are we going to just let Valley Landscaping get away with that? No, we are not. So what do we actually do here? Well, we are going to charge Valley Landscaping, and we have to actually put this on accounts receivable because they haven't paid us yet, right? And when we realize that it's a dishonored check, it'd be nice to collect it from them right away, and maybe we could do that. But the likelihood is if they didn't have enough money to pay for it the first time, we're going to have to record this as an accounts receivable, meaning they have to pay us later on. So we put in the date, and then we're just journalizing like normal. We're going to use accounts receivable because that's indicating that they will have to pay us back. And accounts receivable is an asset. We increase it on the debit side, so $225 there. And then cash is going to go down, right? Because we received that check. Cash would have went up at that point, and now we need to reduce that cash because we don't actually have it. And we even reduced the cash by $225. Why? Well, we can't not pay the bank right away, right? So essentially we need to kind of pay we need to pay the bank right away. It's going to come out of our pocket, and then in order to get that money back, we will charge Valley Landscaping. So here we go. That's journalizing a dishonored check, and our source document is going to be that memo. So overall, we go into accounts receivable and we charge Valley Landscaping for the original check plus the service fee. So now we're kind of turning the corner here, and we get into some things that are a little bit different. And they're talking about an electronic funds transfer. So this is really similar to, it's just sending money online a lot of times, okay? That's what it is nowadays. So a computerized cash payment system that transfers funds without the use of checks, currency, or other paper documents is called an electronic funds transfer. This isn't new technology anymore. This is very, very common. Many businesses use EFT to pay the vendors or people that they do business with. And they're just going to automatically transfer them the money. Now, when that happens, it's still coming out of a specific account, and we still treat it like cash. That's the big takeaway here, okay? So we still treat it like cash. And now we're using Bonita Beach Repair, but it says we paid cash on account to Murniak Enterprises for $380 using the EFT. And once again, this is going to be a memorandum as the source document for this. So when we look at it, it's the same thing, right? And they just decided to use accounts payable here, like we owe money. We owe money to Murniak Enterprises, obviously. It says paid cash on account to Murniak Enterprises using the EFT. It even says paid cash on account, even though we're transferring the money, so there's no exchange of cash, but we still treat it like cash, if that makes sense. Just like if you went on Amazon and you put your debit card in and you transferred money to Amazon, it's still your cash that's disappearing, right? The amount in your bank account. So when we look at this, we're using accounts payable. Would we have to use accounts payable? Well, here we're paying cash on account, so we do. But, could we still pay something with an EFT transfer right away? Yeah, we could. It's a possibility. So anyways, we put in the date, which is the 5th. Then we have accounts payable. Accounts payable has a normal credit balance. So we need to debit accounts payable to decrease the amount that we owe. And then cash is going to be credited because using that EFT, cash is technically going down. And we put in our source document, which is a memo. So nothing really new here. We're just introducing what an electronic funds transfer is. And then next, we're looking at journalizing a debit card transaction. Once again, really self-explanatory, I kind of think, okay? A debit card is tied to your checking account. Some of you might have a debit card right now. Now, this is really different than a credit card because a credit card is something that it's kind of like an accounts payable, right? We swipe it and we have to owe it later. A debit card is using cash tied to our checking account that we already have. We just have the really big convenience of being able to just swipe a card instead of writing out a check. So, you know, a debit card imitates a check is what it comes down to. And even when we write checks, we still consider it cash. Even when we use a debit card, we still consider it cash. So now we're journalizing a debit card transaction and we're buying supplies with our debit card. We're going to use a memo again. Let's take a look. Purchase supplies using a debit card memo, number 21. You know, it's really nothing different. We put in the date. Supplies is going to increase because we're purchasing supplies. Cash is going to decrease because every time we swipe our card, technically cash is going down when we buy something with a debit card. And then our source document is the memo. All right, that's 5.3, okay? That is 5.3. Let's jump into the work together, or the working papers here. It's over. Okay, so it says enter the transactions on page 15 of the journal. So on August 18th, let's just put in August 18th. On August 18th, we received a notice from the bank of a dishonored check from Christine Iverson, plus the $25 fee, which is a total of $151, memorandum number 312. Well, we know that Christine Iverson sent us a bad check. And Christine Iverson's going to pay us back for that bad check, right? So what are we going to do? We're going to look at Christine Iverson's account receivable, and we're going to debit that because we're going to say, you owe us more money. Let's go to the chart of accounts and just look here, and we have accounts receivable for Christine Iverson. Let's put that in. All right, how much is it going to be? Well, Christine Iverson has to pay us the amount of the original check plus the fee. And they total that out for us here, which is kind of nice. What happens to us? Well, we lost out on that cash, plus we have to pay the bank that service charge, right? So we're going to put in 151 because our cash is technically going down that much. And then what's our document number here? It's going to be memo number 312. All right, so moving on. Let's move on to the 20th. Paid cash on account to Schwartz Enterprises. Paid cash on account to Schwartz Enterprises, $270 using an EFT. So really what we're doing here is we're just paying cash on account. It tells us that we're using electronic funds transfer, but does that really change anything? Not really. No, not really, okay? So let's jump in here, and we know that it's going to be our accounts payable. Let's just look. Schwartz Enterprises. And we need to bring that accounts payable account down. Accounts payable has a normal credit balance. We debit it. 270. And what's happening to our cash here? It's going down. It's getting credited by 270. What's our document number? It's going to be memo 313. So there we go. Same thing like if you're paying cash on account, okay? It's the exact same thing. We're just using an EFT here. So for number 21, we purchase supplies using a debit card. Really, it's the same thing as purchase supplies using cash. We just have a little bit of a different source document number here, or source document. So what's going to increase? What asset? Well, supplies is. So it's going to increase by $62. And then what's the debit card represent? It represents cash, and cash is going to go down. So when we look at the document number, it's going to be memo 314. Okay, that's everything for 5.3. You see we don't even have to fill out that deposit slip, which is kind of nice. But you will have to do that, I believe, on the test. So let's save and continue here. And here's the on your own. I'm going to move past that. And let's grade this. And there we go. We got a 3 out of 3 on that work together. If you pop open the application problem here, what do we have? We have the exact same thing. So you're going to be good to go here. You can see that there's a randomized problem that I will have open for you. It does not have to be graded though, okay? So that's just going to be for your own practice if you'd like to do it. Because it is a very small little unit today, along with this animated activity that is just going to be for practice as well. But please make sure you complete the terms review, working papers, and the application problem. If you have any questions, please let me know.